इतना सा फर्क है एक बार सोच के छोड़ देने में और लग के कर दिखाने में। मान लेने में कि जिंदगी ऐसे ही कटेगी और सुबह 4 बजे उठ के सोचने में ये अभी तो बस शुरुआत है। किसी मैगजीन को हाथ में लेने में और उसी मैगजीन के कवर पेज पे होने में इतना सा ही तो फर्क है। वीआईपी सीट में और उसकी पिछली सीट में इतना सा ही तो फर्क है। वो जिसका मैदान ही खुला आसमान है वही कल जमीन पर तो था। पूछोगे तो बताएगा वो पंछी ये एक दायरे में सिमटने में और पूरी दुनिया को दायरा बनाने में बस इतना सा फर्क है। इतना कितना है? इतना है या इतना है? जो नापेगा वो जाने कि जहां धरती और आसमान मिलते हैं, नानपुर से दूर, अगर मगर शायद से दूर, वहां भी दोनों में फर्क बस इतना सा है। धरती और 7वें आसमान में फर्क बस इतना सा है। ये एक अंतर प्रेरणा है। ये हमारी, आपकी, हम सब की अंतर प्रेरणा है। एक कदम, एक छलांग, एक बाजी, एक गहरी सांस और एक ललकार खुली हवाओं में कि हाँ मैं बना हूं उन फिजाओं के लिए, कि हाँ मैं बना हूं उन ऊंचाइयों के लिए जो ऊंची तो बहुत है पर नामुमकिन ही नहीं, क्योंकि मुमकिन और नामुमकिन में बस इतना सा फर्क है। धूप छांव में फर्क बस इतना सा है। तो बस चलिए फ्रेंचाइज इंडिया के साथ ये फर्क मिटा देते हैं। फ्रेंचाइज इंडिया, 20 years of ideas.
Good morning, friends, and welcome to Sunday webinar with Franchise India and Business X. This is a special webinar we do every Sunday on exit planning. This is going to be a 25 to 30-minute webinar. We're going to talk about a very sensitive subject, which is selling your business. If you are looking to sell your business, what are the options available for you and how you're going to go about it? But before I go into taking you in the whole subject, let me give you a little introduction about Franchise India. Franchise India is India's foremost start your own business platform. We started way back in 1999. We started helping people who wanted to start their business came to Franchise India's platforms. It can be our online platforms, it can be our exhibitions, our magazines, our consulting capabilities, which is spread now about 95 cities. Anywhere you can reach out to Franchise India, and Franchise India would help you start your new business. We represent over 1,000 brands currently, but over the years we worked with over 11,000 brands, and this would mean a lot of international brands which are looking to enter India. This would be also a lot of domestic brands which are growing within markets. So anything to do with franchise distribution, or even raising capital, all that is done by Franchise India. So that's our parent company, and then we have another company called businessx.com. BusinessX was India's first business resale platform, where anyone who wanted to sell the business came to our platform. It's a digital platform, and listed themselves on the platform and would be able to find the right buyer group. And this has been also running for last 9 years. We're the largest what I call small to mid-sized businesses. When they want to really sell their business, they come to BusinessX platform. So friends, today we are going to discuss about exit planning, and this is a very serious and a very critical subject to discuss on. And sometimes we don't come to terms with that. This is probably the time where you need to really think about exiting your business. Why? Because businesses which are built over the time, you are getting attached to it. You're always attached to the business, and you're emotionally involved in that business. You've given everything to your business, and to let it go to somebody else is a very, very difficult decision. Even sometimes, even you really see a father passing the business to his son, doesn't let go easily. He is also always holding on. He doesn't want to give it so easily to his son. When you're giving to somebody you don't know, or somebody is an outsider, it becomes even more difficult decision. But I can tell you, with my experience on doing this for many years, it's even more difficult decision for somebody actually buying into your business, because they are coming into something which they don't know. So they are more critical. So unless and until both sides set the right expectation, this would never happen. But before we go into the next discussion, we want to understand two very important points. One, why people sell the business and why they need to sell the business. And second is, how do you really time it right? Because that's very important to me. Selling a business decision is one very big critical point. That's a big event in your life when you really decide that you don't want to continue with your business. But equally important is that how you timing it right. Because if timing is not right, you will not be able to set the right valuation. But let's understand first why people want to sell the business. Very obvious reasons. It's not doing well. It's not doing well, and a lot of businesses, especially in this whole 2 years of COVID period, are not doing well. So we are loaded by almost every day so many inquiries coming to us and saying, look, I cannot continue business because my cash flows are broken, my business is not doing well, I lost my customer base, or something has happened where business has no more, it's no more profitable, it's no more doing well. And sometimes it's undercapitalized. It's undercapitalized, the business is good, but it needs more money. Like these days, we get a lot of queries from people coming in who need fresh cash flow. Fresh cash in the business because they need to maybe redo the business, or they need to really pay some kind of dues which have been mounted over the time. Like if say you're running a microbrewery and it was a big investment you did, and last 6 months business has been not good. Last 2 years actually business is not good, and it's been shut. And now you want to revive back. So you'll have a rental dues, you'll have salary dues, you will have some other things. You need to capitalize the business, then it will make sense for that. So most of the cases when people really are not doing well, they would have to look at an option of selling their business. That's a given thing. So you need to really ask yourself this very important question: is your business in good health? And if it is not in good health, what other options you have outside selling? Can you capitalize your business? Can you bring in another investor or partner with you? Can you bridge some money to that you can come down? And if you feel that none of these entire things, then the best option is to really go out and find a buyer and sell the business. And there's also a lot of crime. People ask me question: who would buy a not so profitable business or non-profitable business? Why would somebody buy? And we'll touch on that, why people buy. And that's how really every asset has a value, and every asset can have a buyer, even if it is not doing well. There is the inherent value when we talk about how to really do valuation. But there are many other reasons why people want to sell the business. There are the reasons of succession issue. You don't have your children looking after your business, or you don't have anybody in your family who can look after the business. This part is growing very big in India. It was actually a big problem in Europe and US, and that's how people start planning retirement, and they would have to look at somebody as an exit planner who can come and help them to exit their business. But India, it was not so much a problem. But last 4-5 years, and it's growing by year every year, this has become a very, very big problem. Succession issue is becoming big because one side, the conventional businesses are no more attractive to younger people. They want to look at newer careers, newer opportunities, and newer business opportunities. I know a lot of people who have built their new startup. They don't want to go to their father's old classic businesses. So it becomes a succession issue. And if you have suffering from that succession issue, or you feel that that's going to be a problem in times to come, sometimes you are actually educated. Like I got a call from somebody in Bombay, and he said, my son is a doctor. And most of the Indian parents actually don't train kids to be entrepreneur. They train them to become something else. And then they want them to handle their businesses, which never happens, right? So if you train somebody to become a doctor, you cannot tell him that, look, leave your 25 years of education, and it's a hard education, and then start working on my business. So sometimes that's a big problem of succession. So if you have that problem in business, then you need to find a buyer. Then there may other areas can also happen. You can also sell the business for profit. If you feel that your business is doing well and it's already profitable, then you can really sell the business for profit also. So that's also a very big opportunity. And and if you are somebody who's looking to really also look at some kind of a partner dispute has happened, or something else has happened in the business, then that also is a situation where you need to really look at selling your business, or a partner dispute has happened, or any other area which you feel is becoming an issue with you. So friends, give me just 1 minute. I have some issue on my screen. Yeah, sorry. I think that there's some issue with the screen, so I was not able to see. So because of these all issues, you decide that you want to exit the business, and then you need to really decide, is this right timing? And that's also very, very important to really see, is this the right time we want to really exit the business? And also to decide what are the options available for you. One option is complete sellout, which means that you sell the complete business to somebody else. Second option is you partially sell the business out, because you are good with the business, but you want to cash out of the business. And third is that you have a challenge on operations. You're not so having a challenge on, so to say, anything else in the business, but you operationally feel somebody should be partner with you. So all these are different issues, and you need to have a different approach to it. When I'm looking to sell out the business, it would have a different valuation. And if I'm just going to raise capital and partially sell the business, then it's a different thing. And if I'm bringing in somebody as an operational partner who brings my operational capabilities to do that, then there is a different approach to it. So that also has to be very clearly understand where you are and what kind of approach you want to do. But what are the goals? What are the goals? One is a foundational goal. Foundational goal for anybody who's looking to sell the business is two fronts. One is what I call financial freedom. You want a financial freedom. You want to sell the business and capitalize and really create a financial freedom. Second is reduce your liabilities. You have liabilities and you want to reduce that. Somebody is raising hand. You can use the Q&A box and start asking your questions. Any question comes to your mind. How do you set valuation? How do you find the right buyer? Who can be the right buyer? So all that you can write in a Q&A box, and you can also share about your business which you run, and if you're looking to consider to sell your business, what are your options which you have in mind. But once you have the foundational goal, which means that either financial freedom or limiting the liability, then you also have continuity of the business is also very important for you. A lot of people come to me and say, look, I built this business over the time and I want to see this business keep running. So continuity is very important. Continuity, and sometimes even culture. You don't want to lose the culture. You build brand and you build the values, and you want to have that part also. So you have to, when you are selling the business, it's just not a financial decision. It's also a decision who can do more to justice to your business model. That's also very important, because I've seen sometimes, especially in the small acquisition cycles, the culture doesn't match, and the new buyer is not able to manage the business because it needed a very different kind of a culture fit to do that. So it's a very, very important. Mr. Nawaz, he's writing, he wants a sport in my business. So what kind of sport you're looking for, Nawaz? You can elaborate, then we can really take that discussion ahead. So once you have, and I always say that it's most difficult decision is to set your mindset to that this is a time which is coming. I know I've seen a lot of people who continue to run the business which is not performing, and they start putting good money behind bad money, and they don't come to terms that you are no more the right person to drive this business. And sometimes, and it's not a financial problem. It's not I go to business owners and talk to them, and they invite us for talking about exit planning. And most of the time they would say, oh, because this business is not doing well, because I'm not done so much of marketing, or I don't have the right talent. And I sometimes look at them and say, you are the problem. Problem is not with the business. You are the problem itself, because you're not fit for this business. And sometimes you get into business like that, which you're not really right person to run it. Maybe somebody else can do more justice on that business. And this is very difficult for anybody to really come to terms with. So first, my request to all of you who's come to this webinar, and if you're really looking for an exit planning or thinking about this, or it comes to your mind, you need to really firm up that mindset. It's very, very important, because if you're in between, you will never be able to do that. Aman, welcome. So we can obviously discuss with you your business. I would need to know a little more about that business. Rather, I have actually a big company which is acquiring these days. Your category, I don't want to name the category, but they're acquiring a big category, so we should talk about it. And my colleague Sumit is also on the call. He will get in touch with you. And yeah, Nawaz, I will understand your business. Thank you for sharing your information. I'll pick up that question at the end of the webinar. So once you have set the mindset, right? So if you have really decided that you want to do that, the second big thing which comes in, what is the value and how you determine it? That's a very big question. And sometimes you have very unrealistic value about your business, because again, it's coming from emotional, what you think in that. But you have to look at that anybody who's thinking to buy your business needs to make a financial sense out of that business model. So you need to have a right valuation. And how do you calculate value? And this becomes even more difficult when it is a privately held business. A lot of things are not recorded. The information is not there. So a lot of people come and tell me, look, I have this in the white, and this is in my C component. And I said, I don't want to even look at the C component, because at our level, we would like to see your balance sheet. We like to see what has been the performance of the company, which is in the books. Because anything which is not in the books, it's very difficult to determine. And it becomes us in a very difficult situation if tomorrow that didn't exist. And in the past, we did some deals like that. And sometimes the new buyer would complain us and say, this was not right, and this was not rightly disclosed to us. So I've now decided that I only work on what is the balance sheet and how the balance sheet is situated. Or there are some strong parameters which can tell you that this business is in on this health. It's very important to determine that, and that would really take us to understand the valuation of the business. My own practice of valuation is very different, so I approach it very differently, because I work with a lot of privately held businesses and small businesses, and that's our specialization. Business X specialization is assets worth anything from 20, 30 lakh rupees to 100 crores. That's the bracket we work on. That's a sweet spot. No other company really does that, and that's where we are very, very strong, because we have the largest investor ecosystem in this bracket. Nobody has more ecosystem than that. Franchise India and Business X enjoys over 6 million investors, which come in this bracket of say 20, 25 lakh rupees to about 100 crores. So we enjoy that position very, very clearly. So how we approach the valuation, I have a principle called Sas Principle, SAS Principle. I divide every business into 3 parts and look at from a different viewpoint on 3 things. First, S stands for the strategic value. Strategic value is, to me, very, very important part of it. What is that strategic value of that business, which is very critical for that business, and also has a very unique value proposition which it has. That's very important. Sometimes the strategic value can be location, it can be raw material. Like I had a call with somebody who wanted to sell a business which was located in Himachal. And over the call, he said the location is wrong because the raw material really comes from Mudra port and it's very far, and Himachal becomes even more logistically expensive. So it doesn't have a strategic value, right? But if you were, say, the same factory closer to Mudra port, and you had the lowest transportation, great supply chain advantage, no downtime, and it has a strategic advantage, right? So what is that strategic value proposition which you have in business? That's, to me, very important part. And especially you understand when a buyer comes and looks at your business, he always looks at, if I have to replace this by a new business, why should I take this running business which has a lot of hidden things I don't know, and I can recreate this in the same place, which we call the replacement value. Strategic thing really plays a very important role, very, very important role, because there would be something which can be an entry barrier for a new buyer to really do the same thing which you already done. It can be sometimes even talent. You have that talent locked in, which is your strategic value. Second is the A. A is very simple, which every other valuation company would look at, which is your assets. Both tangible, intangible assets, what have you deployed, and what are they currently valued at, which means that if they're tangible assets, what are the depreciated value? Intangible rather appreciates. Sometimes you have built the brand and the brand equity is much higher at this moment. And the third S is the subscriber value. What is the subscribers you have? What are the customer base you have, and how frequent they buy from you, how loyal they are to you, how predictable they are going to be for next 4, 5, 6 years. That's very, very important. On these 3 parameters, we will come down to create the right value. And I will also do a lot of comparatives then, that if somebody wanted to really recreate whatever you've done, what would it cost? I will also do a comparative of other businesses in the same industry, how they have been really rated. And sometimes, like, I'm advising a big QSR chain today, privately held, a big QSR chain. So I'm evaluating it because it's also good size, because there are a lot of listed now companies at what trading multiple they are working on. So that comparison also gives you some kind of ratios on your EBITDA multiples of valuation and so on and so forth. But private businesses, smaller businesses, becomes even more harder to really determine the value. So you need to do a lot of questions. Yes, can an individual business be sold? Absolutely. And this is what I really started this journey, because I used to feel that the small business or individual businesses used to get shut. Because they didn't have an option, they would close it. And we all know that every time in our neighborhoods, we see new businesses opening up and just closing down. Which means that the seller, the business owner, was not able to find the right buyer for the business. Eventually, he had to shut. I always tell anybody who comes to me and say, I want to sell a business, I need your help. I say, you have three options with me. First option is, I'll get you the right valuation because you come to the right time and right structure. If you miss that boat and you build a lot of liabilities and other things, we'll try to do a haircut valuation, but still find a buyer. And third is liquidation. You have no other option left. It's too late now, and just liquidate the business model. So you have to be very, very particular that what stage you are in. That's why I always keep telling, timing is the key. Timing is the key. Sometimes you build so much of liabilities in the business, it becomes impossible to find the right buyer. So you have to really know. And difficulty with people is that they don't know the real value of their own business. Most of the times we know worth of, what have we, cost of everything, which means that whatever I've invested in that, I've done so much in my investment in infrastructure, I've put so much of money in my marketing and things like that. You know cost of everything, but you don't know the value of what you've created. That's very important. And also very important is to really see from the eyes of the investor. What would the investor look at your business and why it would look at a business? And that's very important. When people come to us and say, tell us what are the few things which investor is looking at, a couple of things I can tell you very, very important. First is the complexity of the business. That really scares new buyers because they don't like to have a complex business which they cannot manage. So which means stable team you have, right processes you have, right systems you have, right financial administration you have, right compliances you have, all that gives a big confidence to the new buyer. Even sometimes I don't take the business to the market. I will put maybe 60 days to 90 days to set that right. Because if I take business at the same stage, it actually puts off the investor because they feel it's very complex to manage the business. And complexity is something which is not so advised. So you need to really take that complexity out, make it simple for somebody to do that. But 5 things over the years I've realized which are most critical and most important for any company which is now looking to sell themselves or sell a business out there, need to know. Sometimes, when we talk to business owners, they talk about their past. Nobody's interested in your past. That's the first thing you should note. People like to know the future. So give a very clear information on what is the future holding and what is that value and why you say that. Even sometimes you come to the business which is not performing, but you know that you were early in that neighborhood. Say somebody said salon. So I will just take an example. You opened up a salon in a location, which was the emerging location. There was a lot of new apartments coming in and so on. So the future looks good, but you know the pressure of businesses today available. You're not able to optimize. You're not running to your optimum capacity. You're running to our 40%, 30% capacity. Like these days, a lot of businesses which come to us are COVID impacted. So they are running on a 20%, 30%, 40% of their capacities. And if they are running 40% of capacity, it doesn't mean that the business and opportunity has gone anywhere. It's just the timing of that opportunity is not right. And the reasons for somebody to sell that is because they are invested into maybe multiple things and they want to consolidate their position. They want to really not put money in every business. They want to really take the consolidation. And sometimes you don't have that money. You don't want to bring money from your home to service that business for the time it is not doing well. So you might take a call that maybe I'll take a haircut, but I want to sell the business right now. At least I would like to do my stop loss. Stop loss is very important. And sometimes servicing the debt is becoming very difficult. We're getting a lot of calls these days where people coming and say, if I don't really put money in the business for next 3-4 months, I'll have a default on my loans, which means now it's become very complex. You get only 1 month to service that loan, a default. And if you don't do that, it is declared NPA. And once an NPA is declared, then it's a whole new complex process of NCLT and so on. So you anyway lose the control over the business and it's gone out of you. So very clearly to me, timing is the very, very important aspect. Timing is extremely important. And that's why smart entrepreneurs, when they are at some time at the peak of their business, decide to sell because they know they've done whatever they can do and they are not able to go further from there. And they want to, at that stage, take a call. And sometimes smart entrepreneurs want to cash out. They want to really create wealth by selling the business because it's come down to that level. So think over it where you are. So first thing, when you're presenting an opportunity, always present the future over past. Second, replacement of founder This is very, very critical. Sometimes we see businesses are just around you. You are the one who's running all that. And it becomes then very difficult for a new buyer to come in, because how can they replace you, because you are inside the business. But if you build a business where you are redundant, you are no more required, and business run by itself, that business to me is more valuable because investor would be able to do that. Third is predictability. What is the predictability of the business would come to? If you have recurring incomes, that's also very interesting, very, very good. So I have done a lot of business sales where there was a recurring income. If somebody can show me that there is a recurring income, like we sold one business which had a big contract from railways, contract from railways, which was 4 to 5 years, and there was a predictability of that contract. I know Government of India, Railway Ministry contracts, very, very good contracts. It cannot go, and you are distributing a particular product. So that was really, to me, something very important. And if there is also some unlock value, every business has some unlock value. You are building something, you're manufacturing something, but you can also manufacture this. Like recently, a company came to us and they were manufacturing one product, but they thought that in this period of COVID, they can also do surgical gloves out of that same business. So it is unlock value, because there was a new demand which was being created, and import from China is becoming more and more difficult. So same facility can create that kind of opportunity. So sometimes that value is very, very important. Now let's understand at what stage you should really make a definite decision that you want to sell the business. That's very important. One stage is when you have peaked out. You have no idea is coming to you. Last 3 years, 4 years, 5 years, you are at the same level. And this is a problem in a lot of businesses which you have inherited. You just keep running that business. You have no growth, no structure. You cannot break it to the next level, but you're in the kind of a trap of a basic income which you're generating from that business, but it is not growing. It's not going to the next level. So that stage, I think you should take a call that is it meaningful for your life to be put into something which is not even growing, right? And sometimes you don't have that ideas, or you have no ability to, or not aggression, or you're fatigued. You don't have any kind of same kind of effort which is there with you. And I've seen a lot of entrepreneurs who are fatigued, who doesn't get the same energy to run the business entire thing. While business can grow, but they don't have that energy. They don't have a fresh viewpoint on their own business. So that is a time you need to really look at. Maybe that's the best time for you to exit. And if your business is profitable, even better. Second thing is that you know that in the current times, scale is become very important. If you don't scale yourself, you will also go out of the business. Like we are advising a lot of companies which are buying digital assets, which can be digitally very big. Say, for example, you're doing an offline retail kind of a business, which is general distribution, GT, or modern trade distribution. Say you are a food processing company, and you are only limited to general trade and modern trade, but you have very little online capabilities. So we are actually doing a lot of transactions like that. But if the business model looks like that it can be digitally scaled, but you don't have that capital to do it, it might be a good idea to really bring in either a partner in or sell the business, because there is a potential in the product. But you don't have that kind of capital to bring that scale to that thing. And today, if you don't have that kind of ability to scale that, you will get marginalized, and eventually you will start declining, and then you'll go out of business. That's the big challenge which we all seeing around us. Sometimes businesses, because you don't have that kind of capital which your competition has, you are not able to really compete in the market. Another area is that you found something which is very good for you. And this happens in startups. Sometimes you build a startup, and like, for example, a direct-to-home pharma business. Suddenly, 4 years back, everybody started seeing the huge opportunity in direct-to-home pharmacy. Direct-to-home pharmacy has no brainer. If you can order vegetables and everything else, why would you not order pharmacies? But it had a regulation issue, because you need prescription, and there was confused viewpoints coming from regulators, and there was also a big lobby by the pharma association, because they didn't allow that and that. But it has to break, because the customer wants it, and COVID gave all the reasons to really allow that, because people were at homes, they needed a medicine, and it has to be delivered to you. So COVID really actually helped a lot of new regulations to ease out doing that. And certainly, and I did this webinar about 2.5 years back, and I actually tell that now you'll start seeing quickly all the acquisitions in this space. And that's exactly happened. Reliance bought one company, Tata bought one MG, Flipkart bought Sasta Sundar, Apollo started their 24-hour delivery platform. So everybody just jumped into that, and this would become very big. So sometimes there is an opportunist time. A lot of action is going on in industry, and one option is that you go and compete. Second is you collaborate quickly with something which is much bigger, and you are able to do that. So that also is a question you need to do that. And finally, you cannot fight the elephant. If somebody has become too big in your industry, you need to go out and join with them. Say today, any edtech company comes to me, I always tell them that, look, there is no option. You have to really, like yesterday, we were doing a company which was in language training. So they do different languages training, an edtech platform. And I said, good to scale, but eventually you need to join any of these large edtech companies because they have built a platform, they have built a large ecosystem. And eventually in consolidation, you need to be part of that. But you can now scale. This might not be a category which is exciting, but if you build a meaningful category size, they would go and acquire you. This is also very important. Sometimes you are, say, a direct-to-consumer business. A lot of direct-to-consumer businesses have been built, but you don't have a wider distribution capabilities. So why would a Unilever Ventures or any other company would come and invest with you? Because they clearly see they can bring in a distribution. You got an innovation in your product. This can also be a good outcome. So friends, I'm coming down to the last part of the webinar. So if you have any questions, use the Q&A box and ask the question. I'll take the questions quickly on that. So very important part is that how do you set expectation? So I would say anytime any seller comes to me or a business owner comes to me, I always tell him, let's set two parts to this. One, what is a must-have valuation, which you need it because this is something which is non-negotiable. We'll not go down like this before that. And we will also do nice to have valuation, which is a little higher, where you can really get some right valuation. So set this parameter. That's a bandwidth we will work on, and then we go out and approach the right kind of group. If it is a business which is not so doing well, then I have to look at somebody more strategic who can turn around that business, make it profitable, and make it sense out of that business. And if it is a financially performing business, then maybe a financial investor would be a right idea. So Business X is our consulting platform where we work with you, and we have also certified business brokers all over India who work with you confidentially, understand your business in depth, understand the reasons why you want to exit, understand the current resources you have, which means financially how much time you have to feed that business, or even your resources, other resources, which means that your infrastructure you build in, the team you have, and everything else. That all is very important for us to understand. Then we also understand who can be the right buyer group for you. And before we even take a project, we define that. Who can be the right buyer group, right? And then we set the right expectation and do the valuation for your business. And we create an information memorandum, which can be presented to new buyers. All that is done very, very confidentially. Very strong capabilities we have on valuation. Very, very strong capabilities, obviously, Franchise India has on marketing and reaching out to potential investors. And then we participate into a lot of negotiations. That the challenge is sometimes even if you have a term sheet sitting there, from a term sheet to actual contracts and transfer of business can take a couple of months. At that sometime you need to really think through. That's why I'm thinking more on timelines. Sometimes we get people who come to us at that time, they're very comfortable because they say, oh, I want to sell the business in 6 months. And from 15 days from there, when they sign with us, they start calling us and say, I need to sell it right now because my business is suffering. Because you, as a mindset, you start growing your business, you're not putting attention to your business because now you're in a mindset to sell the business. So I keep advising them and say, till the time the deal is not done, your intention is to continue to grow that business. Because it might take 4 months. At 4 months, if you have a declining revenues, you will get valuation of the declined revenue, which is on the 4th month. So you need to continue to rise the business. And when the event happens, at that time, what valuation you have is would be based on that business at that stage. So it's very important to continue to build the business, keep the focus, do right things, and keep the business inclined that new buyer can really take it. So friends, this is a very important and complex decision, very, very important and complex. I know a lot of people suffer as entrepreneurs every single day because their business is not making sense for them. And I know it can be very hard. It can really disturb your financial system, and it can also disturb your a lot of other liabilities can come on you. And sometimes if your business fail, you have many years to cover your losses, which if you've done borrowing and you borrowed on your assets and things like that. So it's a very, very important decision, and you need to take it very carefully. And if you need our advice, we are all there because we are the most experienced team when it comes to mid-market assets or resale of mid-market assets. So let me see some questions. Somebody's launched a cosmetic brand. Yes, that's right. If you, this is exactly the stage where you are in, and if I understand the size and business and a little more about Mr. Kulkarni about your business, there is a lot of acquisition going on in this space. Especially our D2C space has become a big acquisition, both domestic aggregators, which are aggregating digital first companies, but also global companies. If this is just now a company entered from US, has put in about 500 million fund to just acquire such companies. So quickly reach out to us and we will be able to understand what is your business model and how we can help you. There was also one question, somebody said, I want glass cleaner, hand cleaner, dishwashing, floor cleaning. Very interesting category, Nawaz. I don't need to know what have you already done. Again, there is a good acquisition going on in this category. And if you have something meaningful being created, some unique technology or anything which is right from technology, brand, packaging, everything else, I can really bring in something meaningful for you, because a lot on going on in this. Actually, 2022, 23, I see this whole micro M&A market would see a boom. Companies which have revenues of 1 crore, 1.5 crore, 2 crore, early stage businesses would get acquired. This never used to happen. You need to really go to a certain size and only it would become reasonable for somebody to invest with you or acquire your business. But now there are a lot of micro acquisitions happening because of the digital economy. Digital economy gives you the play that you can pick up any SKU, even a single SKU company. If I just produced one product, right, there is an opportunity to really scale and build that. And that was not available in the earlier business structures. Now it is because of our global digital distribution, a lot of that can happen. So if you have a business which you need help to sell, or even to raise capital, or you need some kind of a mentorship or coaching, you can reach out to Sumit. Sumit works with me directly with me on BusinessX. So he'll call you tomorrow in a working day and understand your business model. And as he works with me, so if there is something which I need to really participate, which means that if you want to get on a call or a Zoom call to understand your business better, we'll be more than happy to do that. And we will also guide you if we can handle your project, because not every project I pick up, but most of the times if I pick up, I put a lot of my own effort, time, and it takes a lot of effort and time because resale is not easy. It's not really getting people the new business. It is a very complex decision to do. But we are the most experienced team, 24 years in business broking. Nobody else has any even close experience of that, what we do. And we are very well connected, 95 cities, we have operations, our teams on the ground. And if your business has some value out of my SAS principle, I told, SAS principle, then we'll find a right buyer for you. So thank you very much on joining today on this Sunday edition. And if you are also interested in starting new business, then keep coming to Franchise India platforms. Every day we do a webinar. Now 12 o'clock also a show is starting called Bharat Franchise Show. That also you can join, and many other platform webinars are happening which we advise people to start a new business. So thank you very much for joining today, and thank you very much for your time, and really appreciate. And I will also put my direct number. And if you have something confidentially you want to discuss, sometimes a lot of people tell me that we want to only reach out to you because we have something to discuss. This is my direct number. You can send me a WhatsApp, a little message with the full details. And you can also reach me at gm@gauravmaria.com. And at my site, gauravmaria.com, you'll also see a lot of videos which you can refer. So thank you very much. Thanks for your time and really appreciate you taking time down.